Hey everyone, it's Evan here from the Trade Risk on Wednesday, June 28th here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off the video looking at some sector analysis. Now we're going to jump right into things today. S&P 500 SPY ETF finished up 89 basis points on the day. That recovered all of yesterday's gains, bouncing back sharply. We had an 81 basis point sell-off yesterday, 89 basis point recovery today. So where does that leave us here? Let's take a look first at the weekly chart. If we zoom in here, you can see we're up fractionally on the week right now, up 10 basis points. And we're still looking at the cash market here because remember the S&P 500 SPY ETF did recently go ex-dividend, still skewing those charts just a little bit. So we're going to look at the cash market here, and you can see 4 weeks now, or in the process of the fourth week, moving sideways here, right underneath all-time highs, basically at all-time highs, but haven't quite made forward progress. We're not above last week's highs. We're not above last week's range. We're still kind of just moving sideways here, which again, doesn't have to be a bearish thing. It could be, but at this point, we are in the context of a long-term uptrend, and we are just moving sideways here, letting some of these fast-moving averages catch up. So back on the daily time frame, yesterday we had kind of that scary day, or actually let's back up first. Monday. Let's start off with Monday here because I think this is really the first interesting day, and this is what kicked off the week. We had a small gap to the upside. We had an intraday rally trying to get above this 2442 level. That's the level we've been talking about the past couple of video updates, and you can see we got that rally, intraday rally, above this resistance, but we failed to hold those highs, and in fact we moved red on the day and kind of had this little look up and failure look where we broke up and then failed to hold those gains, closed on the lows, and then got some follow through, which is tough to come by in this type of market, but we got follow through to the downside yesterday, bringing us all the way from the top end of this range to the bottom end of this range. It's only about a 1% wide range, but notice where we closed yesterday, very bearish looking, kind of looking over a cliff. Now, in any other year, this would probably be a scary type of close, but this is 2017, and we buy the dips here on these types of days. Anytime you get a couple of days to the downside, you get one large expansion to the downside. Those have been buying opportunities, and so far it is proving to remain that way. As you can see here, we had this nice snapback today. So where does that leave us in the context of this range? Well, we're still in the range. We're looking for consolidation at this point. We're at the we're looking at for follow through, continuation out of this range at this point. We are back to the upper end of it. If we can get some strong follow through to the upside out of this range tomorrow, that would be very bullish behavior, especially given this type of false breakdown, if you will. I know we didn't really break down here, but just the fact that we kind of washed out, closed on the lows, looked pretty scary, had this gap up, rallied up. That type of, kind of washout in itself would be pretty powerful for at least a short-term continuation signal if we can get movement back above 2442, essentially back up, recovering Monday's high. So that's what the bull case is. For now, though, zoom out here, sideways, flattening sort of moving averages. Still got bullish alignment here on the 8 and 20 period, but really just kind of moving sideways here. Very choppy action, and you want to protect yourself in this type of environment, making sure you don't get chopped up too much, especially playing on the outer bounds of this range. So let's see if we get that follow through, get that convincing close. And even then, you still have to be pretty careful. We had a nice convincing close out here on Monday, and that was turned into be a rug pull. So got to be careful in this market. There are certain sectors that are working. We'll talk about them later in this video. But from a bigger picture here, S&P 500 consolidating sideways right underneath all-time highs within the context of a long-term uptrend. Now, if we move to the IWM here, this is emerging as the strongest of the major markets here. That's something rare to say, something we haven't said too much in 2017, but we are very resilient, sort of at all-time highs here, just underneath all-time highs in the Russell 2000. We broke out from this little channel here that we ended up sort of bouncing from the lower end of it last Thursday. We got to the upper end, and then we had a little bit of dancing here, particularly to start off the week. But again, this quick snapback here today is now very quickly brought us back towards those previous highs. If we were to zoom out here, you can see you get this kind of upward drifting channel to the upside here, and we're coming up towards the upper end of it. That has proved to be resistance going all the way back to December, so maybe not get too excited up here as we approach the upper sort of trend line here that extends from that 2016 December price level. So keep that in mind. But again, when you take this in comparison to the Qs, the S&P 500 and even the Dow, I guess at this point, even though the Dow is still pretty strong, the IWM is holding up pretty well, all things considered. On the downside, what would get us more concerned about this index? Where's the level to pay attention to? It'd probably be about 140, 139 if we took out the pivot low from last week there. That's when you'd want to probably get a little more concerned. That's when you'd potentially roll back over towards the lower end of this channel, but that's nowhere in sight right now. We're still kind of marching higher in a very calm fashion. So IWM looking good. And then we have the Nasdaq 100 here. Now the Nasdaq had a very strong snapback today, up almost 1.5%, basically neck and neck with the IWM. So almost recovered all of yesterday's gains, which is very impressive. But from a price action perspective here, the Nasdaq is now the index of concern. It is the laggard here in the short term, and that's something new to say. From a year-to-date basis, the Nasdaq is still crushing on a return basis, but in the short term, we still have yet to come back up and get to these prior highs, to retest these old highs ever since this high volume breakdown day back on the 9th of June. So we had that high volume breakdown, and ever since then, we've just moved sideways. Monday was an interesting day. It was a day to take notice, very similar to the S&P 500. We had that gap higher, a little bit more of a gap here in the Qs, with a small attempt to push higher and then a failure, a move into the red, and a close at the lows below the prior 2 weeks highs. So that was a bit of a failure there, and we did get that continuation to the lower end of yesterday of this past month's range. And today again we saw that snapback back towards the upper end of that range. So where do we stand here? We're really, again, very similar to the S&P 500. We're moving sideways. The only difference here is we're moving sideways, not quite at all-time highs. We're moving sideways at what could potentially be a lower high. Potential is the key word. I put out a blog post yesterday saying, beware of the engulfing bearish weekly bar. You can see today, given the snapback here, that is not the case anymore. We don't have that weekly bearish engulfing bar as it stands right now, midweek on Wednesday. It could happen if we get back below 139.28, and it doesn't have to be a doomsday scenario just because we get a weekly bearish bar. It was really a post to present some context and just to show what's been going on here at a potential lower high situation. The concern I have with the Qs is the lower high here, the volume that has picked up on the downside. Again, today was a nice snapback volume day, but you can see going back since June the 9th, you can see all of these sell days been a bit of an uptick there in volume, and that to me is something that is interesting. It's a change of character, because if we zoom out, we look at this entire trend that has taken place since call it election time, Christmas time, since 2016. We've got just kind of standard with some, standard volume with a couple of upticks here and there. But take a look at what's going on here recently. This is a change of character. This is high volume. So it's something that, again, doesn't have to end in a doomsday scenario. I'm not trying to call a top here. I'm trying to say, out of all the places to be in the market right now, the Qs would have me concerned the most, just given the couple of factors that we just outlined here. So what changes my tune? What says, okay, you know what, maybe the Qs are fine? Really, it's just follow through back to the upside here, getting above the prior 2 weeks highs, getting above this range, making our way back up towards these prior highs here. If we can start to do that, if we can get those moving averages here on the daily chart back, pointing up to a bullishly aligned sort of scenario, then that is definitely a much more welcoming scenario to allocate into tech, into some of the names in this sector. So with that, I am still short the Qs here. We got short on the 26th. We got short on this failure here, so kind of that setup that we talked about back below this range. We covered about half of the trade yesterday towards the close of the day, and we still have half of that trade still on. So that's the way we're playing it. We still have that we still have that short trade on, looking to see if we can stay contained below these highs here. If we start to lift back above, call it Monday's range here, starting to get back and recovering these gains above the prior 2 weeks highs, then I would call it quits on that trade and say time to move on. Nothing interesting left to see. So that's the trade. That is the analysis there on the Qs, and that's the market overall. I think we're in, depending on where you're looking here, the S&P 500's got some bright spots, got sectors that are working, but we do want to pay attention to see how this range ends up resolving itself. We want to be careful in technology and some of those other sectors like semiconductors, and stick with some of those leaders, and we'll talk about more of those sectors in just a little bit. So that's the market overall. Let's get into some other markets here. We'll go to TLT next. You can see TLT has pulled back a bit this week. We had sort of this this reversal candle Monday where we failed to hold on to those highs, again closed near the lows of the day. We saw that follow through on Tuesday to the downside with that gap lower, kind of leaving Monday's price action in the dust. That was enough to get us out of the trade. If you remember, we've been in this trade for a little while now, that we had kind of that runner position still working for us, just trying to continue with this trend for as far as it would take us. That was enough to take us out of the trend. You can see it's still holding above, say, this lower channel line that's coming in from the beginning or mid of May, and this will be a bit of a test here for the bond bulls. You can see a slight uptick in volume there, but nothing too extraordinary, but a bit of an inflection point. If we do see that continuation lower towards the end of the week, if we get that week close into the week on Friday here, that would be a bit of a concern, maybe a slight change of control there in the short term in TLT. So something to pay attention to for EU bond bulls. What else? If we go to the metals next, we'll go to GLD. You can see still just kind of moving along sideways here. I'm not too interested. Don't have much of an opinion. Just very kind of messy price action in here right under this 120 level. You can see bearishly aligned slightly, but fairly flat 8 and 20 period moving averages. So gold just really not that interesting to me. Silver trying to get a bit more of a pep in its step. If we go to the weekly chart, you can see trying to follow through to last week's potential reversal bar, but you still got moving averages ahead of you above price right now. So still, again, kind of a messy range overall holding pattern there in some of those bigger time frames. If we go to oil, USO floating higher here over the past 5 sessions ever since washing out on last Wednesday, the 21st, 2.5% down day towards that 875, 870 level. We really haven't seen any other selling pressure continue to surface. We've just been moving higher here. Look at all of these bars here on the downside, though. Lots of sell pressure, lots of upticks in volume there on all of these moves lower. So keep an eye on this rally here into some of these fast moving averages here. If you're looking for a sell setup, look for that reversal. Downtrend, the trend is lower at this point, coming in again to those declining moving averages. So still not an interesting setup here that I see to pick a bottom or try and get aggressively long. If you're tactical, though, certainly you could play around in some of this volatility. And then finally, natural gas. This is getting a slightly more interesting setup as it finds some support around this 650 level. It's back to the highs here from early June. So let's see how it handles it. Again, moving averages, the 8 period trying to race higher back towards that 20 period. Nothing that interesting from a volume perspective, but be interesting to see if we can hold this 650 level, if we can get these moving averages to turn around and maybe start to lift higher on a double bottom of sorts, then that's a slightly more interesting setup there. So that's natural gas, that is oil, and I think that covers all of our major markets that we usually cover. Let's get into some of the sector analysis. So I think today, interesting interesting sector here is the transportation average. So this is the IYT, and you can see it's flirting with these prior highs here. If we go to a weekly chart, you can see a pretty nice looking consolidation now ever since topping out at the end of 2016. Really, we haven't gone anywhere. We haven't seen the Dow Jones transportation average break out to new highs, and you can see we're getting real close to that now. So this has been resistance. It looks like it's still resistance. Let's see if we can get a nice weekly close above there. That would be a great start there to July. XLF today, so this is financials, also seeing a nice move to the upside here. If we go to the weekly chart, you can see this one really, kind of similar to the IYT. This one had stalled out maybe earlier in 2016. It had this attempt to move higher here throughout February, but then it came back. It spent a lot of time just moving sideways here in between this 23 and 24 level. You can see we basically back tested that 24 level last week on this day right here. This was past Friday. And then we came into this week just kind of moving sharply higher to the upside. So we're back to the highs here from mid-June, but we got a nice higher low at works here above or right at this 23.85-24 level. If we can keep this momentum, if we can stay above this higher low, then I think bulls are in a pretty good scenario here and potentially are invalidating this very picturesque head and shoulders pattern that many were looking at in the financials. So XLF looks like it's good to the upside, and healthcare continues to work, up 0.5%, got beat up a little bit here yesterday and Monday, but specifically biotech continues to look real strong here. Had a very high volume breakout, had a couple of day pullback on light volume, and now it's already reversing. IBB up 2% today, so looks like dip buyers may be pretty aggressive there, buying that dip, buying a shallow dip. Weekly chart, again, long-term charts do look good, maybe a bit extended here in the short term, but again, nice high volume breakout, something to pay attention to. Equal weighted biotech index here, XBI, also looking pretty strong to the upside. Those are the strongest sectors right now, with IYT really being a potential breakout candidate. XLY is also pretty interesting, discretionary. You can see this nice channel that it's been in, maybe a little false breakdown below this 89.70 level, and a little messy down here, but really it's been trading in this channel here. If we can get some upside follow through, upside resolve here, that would be pretty interesting. Nice sector to have back in motion there, the discretionary names. And finally, XLI also, again, keep an eye on it. A little messier here, not quite the cleanest pattern in the world, but a nice turnaround from yesterday's kind of close looking off a cliff here. We saw our snap back and close not quite at highs, but above yesterday's highs. So keep an eye on industrials. I'm seeing more, the XLI itself may not look too good, but I'm seeing a lot of names, individual stocks kind of set up here, find some support. So XLI looks like a point of interest, and that's really what the bulls are going to want to see. They're going to want to see like the IYT continue to break out here. They're going to want to see even materials and financials continue to lead, because some of these other sectors, just to get that additional participation, you can't really have biotech doing everything. On the downside, you have XLE, which is still just in this downdraft, looks very similar to oil, not doing anything. Got a very clean looking downtrend here. So until that breaks, I don't think you really have to try and pick a bottom here. You really just need to watch this trend here. Back above 65 is maybe when it gets on your radar, or really, back above $65.50, $66. That's where it starts to get more interesting. XLP, this is the staples, just kind of steady pullback here to the old consolidation from March through May, and utilities, very similar situation, coming back and retesting the same consolidation, same amount of length. So you get some of those staples, defensive areas of the market, potentially continuing to pull back here. You got the transports that could be breaking out. So some interesting developments, some interesting rotational aspects. Technology still, though, again, semiconductors, XLK, the Qs, those are still the points where we're seeing maybe rotation out of those into some of the other spots of the market, some of those sectors that we just talked about. So something to pay attention to. That's all I have for this midweek video. Thanks so much for watching. If you're new here, do subscribe to our channel if you like these updates. Do a couple of times a week. Thanks so much for watching, and talk to you guys next time.